Dilip Bhatt, Joint Managing Director, Prabhudas Lilladher, is now joining us. Dilip, good afternoon. Can you just tell us what's happening in the markets? You think that from a long time, names like India Bull Real Estate, probably DLF, probably some other, high beta names were really not going down. And today we are seeing extreme selling pressure over there. You think markets is losing momentum?
Well, I think one thing is certain, that we are certainly flowing in line with the international markets and more so the emerging markets. And second, of course, a little panic or some kind of confusion created by the Mauritius treaty that we are talking about. I think that is the thing which is playing out as people read more between the lines about the P notes and the repercussion that it will have. I think a lot of people possibly will play safe, and the fears about the slowing down of the intensity of the FII flow will possibly continue. And the worst fears, of course, which everybody is trying to factor in is, will this result in some kind of sell-off, which is possibly going to happen? Too early to say, but I think this thing was certainly in the offing for quite some time, and I think broad contours were known to most of the people, if I am correct. So I think that is one which is really causing some kind of confusion. But if you ask me whether it's breaking the momentum, I don't think so. I think even if it corrects, because if on the one hand, if you say it has gone up from 7 to 8,000, the Nifty, and if it corrects by about a couple of 100 points from here, I don't think it's a big deal. And I think it will be a very welcome correction, because that will be the point also for acquiring, because the long-term prospect still remains pretty intact.
Right, but do you think the cost of operating in India from FIIs will increase quite a bit after that P note tax, or it's quite marginal and it really would not matter because it's still about 2 years away and people can adjust to those changes?
Well, I think on a broadly holistic basis, if you just see that, I don't think a tax is something, even if you're a local investor, tax is not something which really bothers you for the purpose of your investments. That because you're going to pay tax, you're not going to invest. I think the fundamental attraction of the market and the stock still remains the primary issue while deciding to invest. So I think as far as your question of whether cost will go up, yes, cost may go up marginally, but I don't think that it will be such an overwhelming factor which will make them think whether to invest into India or not. The broader call still is that India is still a very good place to invest among the host of emerging markets, and especially in this turbulent kind of economic world that we are into at the moment, and maybe next 3 to 5 years looks good. I think that perspective is more important, and in my opinion is more dominant in the decision making.
Right. Dilip, how would you look at these changes? Now, the changes have happened, and as you said, that, changes are good. It may not be one of the primary reasons why people may stop coming to India. So any sort of major correction is a buying opportunity, say about 100, 200 points here, more from here, or maybe about even 3-4% from here on. Is that a buying opportunity?
Surely. I think this market certainly remains a market to be bought on dip and correction and accumulate them for the long term, because I think if you see, some of the important parameters are really turning the corner, whether it is the sustainable growth in the commercial vehicle segment that we are seeing. Now we are going to see a host of infra orders that are being announced and further likely to be announced, and not to forget, they significantly generate a good amount of multiplier impact into the overall economy. So I think some of these things will really help consolidate the markets. Of course, in the intervening period, you're going to run into the monsoon, and you're also the result season to be played out, and more important, how the current year is going to play out. But I think as we go into December, I think the optimism is something which will come back very strongly, is what our broader sense is. So I think this market certainly remains an opportunity to look for an opportunity if and when it corrects, and when to buy.
Right. How would you look at the consumer names and especially the results over there? So something like a Havells, something like a Dabur, something like a Marico, Asian Paints, fantastic set of consumer numbers, which means that at least, there is some buying in the economy.
Absolutely. I think what you said is quite right. But, even in the rural areas, I think it is a bit schizophrenic in the sense for a few there is very good demand and few the demand has really fallen off the cliff. But I think some of the names that you are mentioning, whether it's Asian Paints, I think it's a very strong set of numbers. And if you see over the last 1 year or so, Asian Paints has not corrected despite the results not being good in the past couple of quarters. This quarter was a very strong results in fact. Overall it was quite good. So I think some of these names like Asian Paints, Dabur, I think they will always remain a part of your core portfolio, providing resilience to your portfolio and also providing a very decent returns in the long term. As far as Havells is concerned, I think now Havells, without any baggage of international company being there, I think looks much leaner, much stronger, and I think the ROEs and the free cash will significantly drive the interest in this particular stock.
Right, and see in in Q4 we have not even seen the full the seventh pay commission impact. Even that will start to come in the coming quarters, so that can have an upside risk to the numbers of these consumer durable companies.
Very much, I think, but that to some extent, in my opinion, that has been factored in, that has been played out. Now the question is whether it will play out in the same way as what we all thought about, and whether we'll see a good revenue getting generated. Of course, we have seen that a very hot March has already resulted in a record sale of some of the white goods segments, be it air conditioner, fridges. So I think that's an indication that as and when this pay commission gets implemented, I think we'll see more traction, more visibility, and maybe accelerated growth in some of the segments.
Right. As far as some of the real estate names are concerned, they've done very well. So whether it's a DLF, whether it's India Bull Real Estate, whether it's a HDIL, do you think real estate as a sector will do well? Or we've seen such rally earlier, and the way these rallies fizzle out. You think that is also something which is possible?
Well, my take is slightly different on this. I think real estate as a sector may have bottomed out. But the names which we are talking, the headline names, they are all in the premium segment. And within this space, certainly I think India Bulls Real Estate certainly has the better credentials, whether it's in terms of the loans or whether it's in terms of execution or whether it's in terms of the balance sheet. I think they all look pretty good. But the way this government is approaching, I think they are, in my opinion, they are very clearly deciding to see that the real estate prices go southwards, they become much more affordable to the common man and to the middle class person. So in my opinion, I think this factor will act as a big obstacle in really re-rating the stocks. Of course, the falling interest rates will really will provide a fair amount of tailwind, but I think the real estate prices will have to come down, and I think the government probably taking all the possible steps to see that they really come down. And I think if that happens, some of the names which you are mentioning probably will have to take it on the chin, because in some of these cases the prices have still not come down from where they are operating.
Right. Dilip, just stay on with us just for 2 minutes. Dilip Bhatt is still with us. Dilip, we were talking about real estate. Let's talk about housing finance companies. You think they continue to be in a sweet spot? Will they continue to do well irrespective of the housing?
Well, I think if you see most of these housing companies, the ticket size to which they are catering to, I think that particular segment still seems to be witnessing a very good demand, So I think in that sense, there is a good amount of buffer which is available to some of these companies. So I think as far as that is concerned, I don't think there is going to be a great impact on them. And I think that will still continue to do well. And I think especially when, as the economy starts recovering much more, and as you see more and more people in the middle class income really benefiting, I think that particular segment of the business will continue to get a good traction. So I'm not so worried about that particular, the housing finance. I think they still continue to look pretty good and interesting.
Right. How would you go ahead and probably look at something like a Manappuram Finance? Manappuram Finance declared numbers. You think gold finance companies, people had just forgotten about it, and today it's up and doing quite well?
Unfortunately, I'm not covering that company, so I'm really not in a position to make a comment on Manappuram Finance.
Right, Dilip, thank you so much for taking out time for us. Always a pleasure.